Okay, welcome everyone. Welcome to the trade findings and adjustments for Thursday, the 18th of November. We will not be having a trade findings and adjustments next week as it is Thanksgiving week. Usually, again, next week we'll usually go through a commentary, but after Monday or Tuesday next week, the volume shrinks and we just enjoy the holidays. Big money's out. Big money's out, and there's not a lot of trading that goes on. So really, you wouldn't trade anything on Wednesday. You wouldn't trade anything on the half day on Friday, as there just aren't the volume to support a continued trend. So we do watch it. We do make sure that things are attended to, but rarely, if ever, do we go through any trading on Wednesday or Friday of next week, as we're trying to do what we can to not, well, we just don't want to trade with light volume and that there's no trend confirmation during that time period of a holiday week. All right, with that said, I'm going to make this comment. Investing is like fishing. And if I was to ask you guys, how is investing like fishing? I want you guys to tell me what you think. I want you to tell me, how would you think I could relate investing to fishing? I'm going to change that, David. David W., I like what he says. Well, and I'm going to change this a little bit, right? You can catch a really big fish. Now, David, you said you always catch really big fish, which is not true. And I'm going to go ahead and bring in here what Bill Brander said. You have some good days and some bad days. So I was going to bring out one of my better days. And I really do love this. If you take a look at this, there is what we call the barking dog hole, which starts right about here. And it goes around half a mile hill here. But you start at the barking dog hole, and then you cut across the barking dog hole, and there are these little holes that all these years I've learned, okay, fish like to be here, fish like to be here. Notice the mountains on where we're at right now. And that's a friend of mine, actually a client, friend/client, that's James Gaber. So we caught this fish, and the comment was, okay, let's go on down. Let's go through and miss some of these holes, because look at that 26-inch bright red, ready to go steelhead. And the comment was, well, we could, but we have another half mile. And it's been my experience that by the swirl hole or by a little stream that comes out, there's that opportunity to find some more fish. And as we sat there, I said, hey, let's keep going. Let's keep going. And now you're going to notice how right here, if you pay attention to the mountains, notice how the green grass changed right there, where it was it was 100 yards off, right? Right here, look how it's back behind us, right? So if you pay attention to this green hill, there's the river hole right after the swirl hole that comes after the barking dog hole. And they were like, God, let's just go upriver. You caught the big one. We're good to go. And I'm like, no. We have these other holes. you know that there can be fish there, you got to go. So notice that green patch. Here we are 100 yards up, and that green patch is now much closer, right? And there's my second, like 32-inch steelhead. And it was literally just around the corner. It was 50 yards down the way. And we hook into this monster. Needless to say, it was a fabulous trip as we finish. That's not a bad string of fish that I get to hold up right there. But the winner, the ginormous one, was one that we almost passed up. That we almost said, you know what? We caught it. We're good. Let's move on down the road. And that's where I want to run a little bit on our investing. We do the research. And someone asked, like on Baidu? And yes, so let me put you what was done into our research. We normally work with, well, I work with thestreet.com and the economic calendar. I like their economic calendar because it is a world economic calendar. And you get a large amount of data from the street.com world calendar. I pay particular attention to the manufacturing data out of China. This is where I'm looking for data on how Baidu could be going. And you go through and you start to go into China and you do your research. And actually, I've already done this. What I'm going to show you is eventually it leads to the World Trade, the World Bank. The World Bank gives you some indicators and you can download it. And all of a sudden, you have raw data. You have raw data that you start going through, GDP growth and where it comes from. And you're looking at this data for growth models to say, okay, can Baidu make money in technology? Can it make money in pharmaceuticals? Can it make money in its movies? Can it make money with its JD.com investment? You do your research to come back to Baidu and you check it out on its earnings. And its earnings, the consensus was 1284 to get 31.873 billion. So if you notice, Baidu is always, it's surprised. 14.66, 3.1921 billion. It was right where it needed to be. If you go through, come on, connect. If you can go through, you can get their Schedule K. You can get their numbers, which you go through, their research calls, and off you go. I mean, off you go to make your best bet. For us, we saw Baidu could and should meet the majority, because it's not all of them, of their matrix numbers. And their matrix numbers are just what the analysts typically are looking for in a company on if they're going to beat on earnings per share, revenue, margins, and there's certain categories like Apple that they're looking for iPhones and they're looking for advertising dollars on Google. That's what we did for our research here on Baidu. Everything should meet just fine. But the interesting part and the sad part all at the same time give me a quick second, just a couple little things bug me. But earnings also has a guidance number. And Robin Lee blew it. What is the guidance number? It's really just a conference call to verify future earnings growth numbers. That's all it is. That's all it is. But Robin Lee never learned from Jack Ma, who disappeared for 9 months when he got a little pro capitalism. When Jack Ma got pro capitalism, he kind of disappeared off the face of the earth. You want to hear a conspiracy theory? China regulators pulled him in, pulled his family in, and said, hey, if you don't knock it off, we're going to chop off the fingers of your kids and your wives. Obviously, that's a little embellished with Hollywood, right? But you don't know. And here you had Robin Lee, who basically said, Baidu's doing great. We own 30% of Alibaba, 60% of Tencent and IQ. We weathered the storms. We streamlined our processes. We still made a profit. We killed it. We survived the regulation that China threw at us. But then he got pissed off. And then he said, but if the regulators continue their childish oversight, technology will be constrained the next 2 quarters. If he had just shut his mouth, we would have seen Baidu up $7 to $10 yesterday. Instead, we are down 9. Well, Kevin, Baidu is down big today again. Baidu really, I mean, they blew it. Baidu is down something fierce. They're down another $8, another 5%. They're going to be down 10% in 2 days. Well, Baidu did not blow it, but they do own 30% of Baba. And Baba blew it. Baba missed earnings per share by $1.24, and their revenue came in, $4.5 billion short. Still great year-over-year growth, but not what the analysts were estimating. In fact, Baba's probably going to have a really tough year because Jack Ma is under the scrutiny and the regulators are under the scrutiny of communist China. And he already pissed off the wrong person. So I'm just going to make an interesting comment here. I've gone through hours of looking through GDP numbers on China, world development indicators, poverty, because 80% of China's in poverty. I mean, I've gone through everything here. I worked through different sector numbers. Excuse me, got a bit of a cough today. Work through different sector numbers to see where the information's at. I've also got another one here where I just kind of go through price to valuation numbers. I do some centralized back testing to see where we're at. I even go through different regions, but the short answer is Baidu is falling, and because of my research, I believe it is a buying opportunity. The funny thing is, when you hear it's a buying opportunity, in the past, right? Buying opportunities in the past equal analysts that blew it on their earnings call, right? When you see someone on TV talk about, oh, it should do this, it should do that, we're expecting this, we're expecting that. You just hear all of these ridiculous comments. And that their typical standard answer is, well, it's a buying opportunity. And I've heard it a half a dozen times on Baba today. Well, it's a buying opportunity. Well, is it? They missed their numbers both on their earnings per share and their revenue numbers. They came out with much weaker year-over-year guidance numbers. The government's kind of pissed off at their CEO and owner. And you think that's a buying opportunity? I think to myself, what the hell do these people get paid for on TV to say? Because I don't understand. What research did they do that said, hey, it's a buying opportunity? Because none of it stated. They can't tell you that they just went through gobs of information and downloads on China and they checked these areas or whatever. That's what would hold value to me. Value to me is if they brought up the same Excel spreadsheet and said, you know what? We went through these numbers. All they do, hey, technical analysis, it's low. Actually, you know what? I need to give me a second. Let me update this. Hey, it's down at 155. It used to trade up at 182. It was as high as 209 earlier. So because it's down 33% from the 209 number, Baidu must be a buying opportunity. With all due respect, bullshit. Because it's down, it's not a buying opportunity. It's not down to the 144 lows. It's not down to the 136 lows. It is bouncing off the 153, 152, 50-ish. But the stock is just down. In fact, what's really scary, if you want to do some technical analysis, looking at Baidu on FinViz, it broke its slight upward trend that it's had prior to earnings. The short-term trend is broken. The long-term trend points to it going down farther. Why is Baidu a buying opportunity? What do you see on Baidu that makes it this buying opportunity? Well, if you were to ask me, I'm trying to get that down and out of the way. It bothers me. There we go. Well, if you were to ask me, it's really simple. Earnings per share next year. The forward PE should not be 246. It should be its current PE. That's just an algorithm. Just an algorithm. Do the numbers. $8.15 times next year's earnings of $65.78 gives you a number of $536.10. That seems a little high. I might take something in between the forward and middle PE, and I would probably put it at 6. If you took 6 times future earnings of 65.78, now we come out with a number that equals $394.68. That is why I think Baidu is a buying opportunity. And not long ago, that number was 396 upwards to 425 when I ran these numbers for you at the last earnings 3 months ago. Kevin, how could you say that? Return on assets, return on equity, return on investment, gross margin, operating margin, profit margin, where is it? Earnings per share growth next year, earnings per share over the next 5 years. All the metrics say, hey, it's huge. And the biggest one, short float. 1% is in the process of being a short squeeze candidate. They're at 3.31%. They literally have like an $80 short squeeze upside opportunity. This is why Baidu is a buying opportunity. The interesting part, I could do the same thing right now for Apple. I could do it for Disney. We've already seen it done on Bank of America. We've seen it done on JP Morgan. We've seen it move on First Solar. By the way, First Solar is no longer a buying opportunity. We're out of it. You can see it on Square. You can see it on Visa. If I just make that same type of Visa research, downward trend, down at a bottom, breaking level support, looks ugly. Man, all of these things that keep popping up. I need to get like no pop-up blockers going on here. So, doing the same numbers. Next year's earnings per share, I would put it at 40. Actually, I'd probably put it at 38 because that's more realistic, 38 to 36. So let's just go on the low side. Let's put it at 36. 36 times earnings per next share, 7.05, gives you a price target of 253. If there's more growth and we put it at 40 times 7.05, we're looking at 282. Kevin, but they have what? England or Europe that's not going to allow Visa to be used for their Amazon charges because Visa charges too much, right? Can someone please tell me how maybe 2.2% of all their revenue justifies a 10% drop in their stock price and a 10% drop in their market valuation? We all know they're going to lower their fees a little bit so that they can be used. It'll be somewhere in the middle from their current fees and what the European Union wants the fees to be. There's no justification for Visa to be trading around 200. It is a buying opportunity. This is what we do that justifies our research, why we trade what we trade. The problem is that the market hasn't caught up to our research, and we look bad this year. Nothing has moved of significant core holdings. Now that doesn't mean that Bank of America, Ford, Under Armour hasn't moved. But some of our bigger core holdings, Apple, Disney, Baidu, Visa, they've all moved down 20% or more. Oh, I just showed you Baidu 33% or more. So what do? It's pretty simple. We keep lowering cost basis, adding shares when we can have them paid for with the insurance, and we will wait until the market catches up without taking the big drops in our stock positions. Not saying we won't take some drop, but we're not going to take the big drops. It's just like fishing. You can set up and do everything right. And some days, 50 yards down the line, you'll catch your biggest steelhead you ever caught out there at the Salmon River in Idaho. Or there's sometimes you pass by those opportunities and you miss them. You do everything that you wanted to do. You do everything right. Logically, you go to the spot, same stuff you used last time, same holes you used last time, and you just don't catch a thing. For me, that's where I feel we've been this year. I feel we've been in the opportunity where all the research points to one area and we just haven't caught a thing. Any comments on what was said today? If I was looking for a trade, it's on Baidu. And I would probably enter something along the lines of a leap bull call at a 160 200 strike price. But I would not be putting it on today. Great question, Dave. So this is Dave. This is not David W. This is Dave. Kevin, how long do you wait? Well, I've looked at my crystal ball. I've I don't know. If I knew that, I would have made millions already and been out of this game. I can't predict the future of the market. So how long do I wait? I wait as long as I have to for it to move the way it should, while I'm still checking my numbers to make sure something hasn't changed. So in all honesty, I don't know how long I'm waiting. I'm waiting as long as it takes for things to come back the way they're supposed to. And I will do so only as long as the narrative stays the same. If things change, if we find out Tencent and IQ and JD and Baidu's been falsifying their numbers, then we're in trouble. And then we're doubling up on puts as they go out of business. But right now, the narrative is the same. Nothing's changed. We hold to the course. We hold to the course. All those hours and days of research are still intact and still correct right now. So I'm not looking to make a change. Doesn't mean I might not in the future, but I'm not looking right now. Good question. Any other questions you guys have? All right. Hey, I hope this was helpful. I hope this was helpful for having you guys understand the work that we do here and why we make our decisions. I look forward to seeing you guys Monday. We will not have any Thursday trade findings and adjustments for next week. We will have our Monday, and from there, in all honesty, by Tuesday, we're probably just letting the market go no matter what happens, unless it's some type of catastrophic event that's affecting the world. Guys, enjoy your Thanksgiving. Appreciate you being here today. 21 of you that showed up. I hope this is helpful for you on seeing how you stand by your numbers and stand by your decision making. How you don't just flippantly say, it's a good buying opportunity. Have real facts and figures behind what you say. Guys, appreciate you being here. Have a great weekend, and I'll talk to you on Monday. Bye-bye.